Tax season is upon us, and you guessed it, a visit from Uncle Sam is right around the corner. See, Sam is like the uncle your parents tell you have to be nice to. He comes around once a year and asks you all these questions about money, investments, random topics, your personal life, and always wants a piece of the pie that you've earned. He inevitably takes a slice that's too big and somehow finds a way to give it partially back to you the following year. As you can imagine, it's not as valuable as it once was. At least, this is how I see it. I should point out, this is just my opinion and not financial advice. I should also point out that the best things in life are free, such as hitting the like button and subscribing too. With that out of the way, let's jump right into it. If you receive a tax refund, you're essentially giving the government an interest-free loan. Let me explain why you're getting a tax refund. In basic terms, you've overpaid the government, so they return the amount you overpaid as a tax refund. At the start of your employment, you received a W-4 employee withholding form where you indicated the number of exceptions. The more exceptions you have, the larger your paycheck will be throughout the year. Alternatively, the fewer exceptions you have, the lower your paycheck will be throughout the year. My opinion is to find the right number of exceptions to net as close to zero as possible at the time of your tax returns. Remember, you can always change the number of exceptions with your employer. Imagine your Uncle Sam from the earlier example, asking to borrow a percentage of your paycheck and says you'd be paid back in a year, but doesn't offer you any interest or any value in return. Just imagine the things you could have done with your hard-earned money. For example, instead of receiving a refund when you do your taxes, you could start or add to your emergency fund. This is great because the year 2020 taught us that sometimes life happens and you could lose your job, become ill, an unexpected expense arises, and you may just need the funds. Banks and other, let's call them
questionable lending institutions,
are for sure going to charge you to take out a loan. And worse, they'll charge you a crazy high interest rate to access those funds. Instead of giving your money to Uncle Sam, you could use that money to pay down any excess debt you may have. Take, for example, paying down credit card debt instead. Many credit card companies have interest rates ranging from 18 to 25%, and that debt only compounds if not paid off. As a result of paying down your credit cards, your debt-to-income ratio decreases, in essence, increasing your purchasing power if you decide to invest into real estate. This also applies in case you're trying to pay off your student loan debt. Now, if your preference is to invest into your long-term future, like a retirement fund, here's where things get good. Instead of giving Uncle Sam that interest-free loan, consider using that money during the year and investing $50 monthly towards a Roth IRA. Investing this amount on a monthly basis over the course of 30 years equals to a total of $18,000 of your own money you've invested. Growing at a 7% rate of return would mean that your $18,000 actually stands at $61,000. If you play your cards right and take your money out after your 59th and a half birthday, that's $43,000 of tax-free money. According to CNBC, the average tax refund in 2022 thus far is just under $2,900. And for many people, that's a lot of money. Now, the drawback of receiving this money is that it's really easy to say or think about it as a bonus or free money as opposed to the hard-earned money that you've already worked for. And it may even encourage you to make a big ticket item purchase when you don't need to. Listen, I'm all here for treating yourself every once in a while, but using a tax refund to live beyond your means is just not a good idea. Next reason for not giving Uncle Sam an interest-free loan comes down to inflation. I know, it's just been dreadful this year. The Federal Reserve typically likes to keep inflation at a modest 3% annually. According to the Bureau of Labor Statistics, inflation stands at 7.5% this year, which is the highest since February 1982, where it stood at 7.2%. You may be wondering, how did I get here? Let me explain. If you would have aimed for breaking even on your taxes, your paycheck, whenever received, would have been slightly bigger, and you would have been able to use that money at its current value. In other words, if you're receiving a tax refund in 2022, it's worth a little bit less than if you would have adjusted your withholdings and had a slightly larger paycheck throughout the pay period. Now, on paper, it would have been the same money, yes, but the buying power has decreased since March 2021. Take, for example, the cost of a gallon of gas for your car. In January 2020, the average cost of a gallon of gas would have cost you $2.50. as of January 2022, that same gasoline would now cost you $3.60. But of course, as life would have it, here's a little bit more of a variable change. As of March 2022, in some states like California, prices are hovering around the insane amount of $6 per gallon. I mean, I've seen this before. The list of examples can go on and on and on, with food, with clothing, with almost anything you could think about. In addition, with the war that's going on between Russia and Ukraine, it's going to have a further global impact on the cost of goods, not to mention the other ways it'll impact the supply chain. To sum it up, here are my final thoughts on why you should aim to break even when you do your taxes. It allows you to not have your money tied up in case there are other investing opportunities available for you. It also allows you to be on the offense in case a buying opportunity arises. If you're able to adapt and adjust to the variable change that life will provide, you can position yourself to take advantage of compound interest and ways to make your hard-earned money work for you. Now listen, I'm not here to bash you in case you do receive a tax refund, but hopefully I was able to provide you a perspective for you at the very least to consider breaking even and not giving Uncle Sam an interest-free loan. I'd like to hear your thoughts on this opinion. Do you prefer to get a tax refund? Or are you like me that likes to aim for breaking even? Let me know in the comment section below. With that being said, thank you so much for watching. Until next time, take care.